Hey everybody, this is Grant. I wanted to take a few minutes here and identify and share some patterns. So as you know, I've been talking about the market engine, and there's a couple aspects to it. There's the market engine indicator, which is what I'm showing here on this chart. This is the green line going up and down here. And then there's the market effectiveness chart. So I'm not going to be focusing on that right now. This is just about the market engine indicator. All right, now the way that it works here is there's three patterns that we get on the indicator itself. All right, now those patterns include the halfback pattern, the two-step, and the divergence pattern. I'm going to go through those, but first let me orient your eyes a little bit on this. Okay, so there's an orange line here on the indicator, and it's at both ends of it, but it's at the top and at the bottom. And what that basically says is that, you know, the market engine's been pushing enough that it's gotten a little tired, and it's at an extreme point. So that's the first thing to note. Second thing to note is above here, this is a 1 minute E-mini chart. The market engine indicator is applied to, you know, stocks as well, but for this example, I'm just going to use a 1 minute E-mini chart. Now, what I want to point out is I've also inserted some vertical red lines. So I just added those because I wanted you to be able to see what's happening with price when the pattern down on the market engine indicator takes place. All right. So the way to trade these is you're typically drawing a trend line on the market engine indicator. Okay, so let me tell you what the halfback is. The halfback pattern always starts at one extreme. So it's either going to be at the top orange line or it'll start at the bottom orange line. In this case, it starts at the top, comes down to the halfway mark. So there's a zero line here, okay? And it can bounce around and chop around through there. What you do is when you see that happen, you draw a trend line on here. And when it comes in, it pops above this and breaks back out over that. That's your opportunity then to take the trade. That's a higher opportunity that there's enough pressure that it's going to return back to its upward movement. Okay, that's the halfback. So starts in extreme, gets halfway across, may chop around for a little bit. When it breaks back up towards the extreme side, that's called the halfback. Okay, that's the first trade. Second pattern here is called the two-step, and as the name indicates, comes up, hits the extreme up here, the orange, also comes up, hits the extreme again. You can see the red vertical line, see what's going on with price here. In this particular case, you know, the way you trade it is you draw the trend line on there, and when the indicator comes down and breaks past that, let's see what's really going on right at that point. All right, so prices obviously started to pull back, shut up for a moment, and then carried all the way down. So that's a two-step. Here's another two-step, which is, oh, let's see, this is June 21st is the day that I'm analyzing. Okay, which was yesterday, I believe. All right. So the two-step works in a similar fashion. So here we got a two-step, but it's also with a divergence. So the divergence, I'll give another example of that in a moment. But here it comes, you draw this, it breaks above it, gives us the two-step, and off it goes. Heads all the way back up there. Here's a divergence and a halfback over at this spot right here. So here you can see that it pushed, and again, the rule of the halfback is it has to come off of the orange or below it in this case. So it came off the orange, got just over halfway, chopped around for a little bit, and so then what you do is you draw that blue line right there. As it breaks down below right there, there's your trade to take it down, okay? Obviously not a lot of movement on that, but still a profitable trade for sure. Okay, all right, let me just go over one more, okay, just to illustrate. So here we've got another halfback. So it comes off of the bottom here, reaches up, gets just barely over it. You draw that trend line. Once it breaks back down, then off you go towards the halfback. Here's a divergence. So one more. So the divergence is you've got the indicator here is really low, and now it comes up, it's higher. Here on price, it's higher, but then price goes lower. There's the divergence. You draw this trend line across here. When it breaks up past that trend line, then you take the trade up. that would have got you a little, not a lot more definitely to the downside. We get another half back. This came off of the bottom and then started to pull back off. You draw the trend line. So the actual entry point's right over here. And then obviously you would have gotten more. Clearly that particular day is more bearish centric, so a lot more opportunities to that side. A few to the upside, but most opportunities on that particular day was the downside. But those are the patterns. So half back, two-step, and divergence. It definitely suggests that you trade also with a market effectiveness chart, because quite frankly on that day the market effectiveness chart showed the market bias was to the downside, was bearish, but so I'd never trade without that. But these patterns are key to watch and track, not only on this intraday chart but on stocks as well. Okay, thanks for joining. I will talk with you again soon.